Good morning, traders and investors. Steve Gans coming to you from Kona in Hawaii. And I'm being a little quieter here this morning because it's very early morning and the rest of the troop is still sleeping. So that gives me a chance to get this report done. So I'm going to do a couple of things here this week. Of course, I'm going to walk through all of our markets and we're going to take a look at those. And then there's going to be something I'm going to share with you here a little bit later on. After I go through our current market conditions, I'm going to be offering up a concept trade idea for you to consider in our current market and explain to you why that might be something to consider at this point in time. This is all for educational purposes. I'm not making a trade recommendation. And then the second thing is going to be I'm going to share with people some results of a new trade that I've designed and developed called the Flyagonal. It is doing extremely phenomenal things. And I'll just give you a glimpse as to how that trade has been performing here over the past 8 weeks. So with that, let's get started here. We're going to take a look, first of all, at the SPX. And something that I want you to notice on SPX, I've zoomed way out here so we can see that SPX has been in this channel for a very long time, up until it dropped out here around the tariff time. And then when we dropped out, of course, we dropped out really hard, really fast. That whole bit has been rebounded. But the important thing in my mind is to see that we are now re-entering the bottom of this channel. Now, many times when you drop out of a channel, you can re-enter back into that channel and kind of resume our prior path, which means that it's not out of the question that our market could run all the way up to the top of this channel again and then take a breath, roll over, etc. Now, is it going to go straight there? I'm sure not. And if there's any major news that breaks, that obviously is market moving news, that can, of course, have a negative impact here as well. But under normal technical analysis, chart pattern reading, we are now back into that channel on SPX. The other thing that you should note is you can see that our volume, while a little bit lower, the green bars are holding up there pretty decently. So on those up days, we're getting a fair amount of buying come in. There's not a lack of buyers here. And that, of course, also tends to drive our markets higher. So that's SPX. SPY, of course, is going to look exactly the same. SPY is just 1/10 of SPX, but aside from that, chart's going to look the same. And then the futures market is going to essentially be the same as well. I just haven't drawn everything up on it. Something I do want you to notice on all of these, though, and this is largely due to earnings that we're holding up as well as we are, and economic forecasts, but we're not only seeing volume holding up here, but the relative strength on this is pretty darn high. We are at the top of the Bollinger Band. All of those are things that are basically saying that the market might be a little overbought right now. But markets can remain overbought for a significant amount of time. But that would be the counter side to this. The bullish side is that we've re-entered this channel. And again, nothing seems to be stopping the market from going higher. So I am optimistically bullish right now. We are heading into earnings season. Of course, that can change things too. But overall, we are bullish. We are a little overbought, but we can always remain overbought too. Volatility, or the VIX, is at some of the lowest readings we've had in quite some time, and almost back to what I would consider all-time lows here. VIX is telling us there is no fear in the market. There are not people buying insurance on their positions right now. They're accepting the fact that, hey, market's kicking along just fine here. Don't need to be freaked out. Let's look at the Qs. If we look at the Qs, we're seeing the exact same thing. We've got this breakout of all-time highs that happened here, and then we're just continuing to run higher off of that. And again, volatility on the Qs, very low, almost all-time lows, so no fear in the market on the Qs. IWM, or the Russell 2000. We are coming into what had been prior resistance here. So that one could stall just a little bit, In last week's weekend update, as you may recall, I had suggested an iron condor as a practice trade or an educational trade between 220 and about 230. And IWM is doing exactly as I had anticipated at that time, chopping back and forth in that window. And that trade is up as a result of theta decay in the trade. And then the volatility on IWM also is very low. So no fear in IWM either. So given the fact that I have a bullish premise on our market right now and volatility is very low, what might be a trade that I would look at? So if we were to look at a trade in option strat, if I have a bullish premise, as I do, I would go out some period of time here. And again, the amount of time, there is no real magic to this specifically. This is out a ways in time. I could tighten that up. Let's just come back to September 19th here. And what I'm doing is I am putting on, in this case, a bull call spread. I am bullish on the market. I'm going to use calls in this trade, and it is a spread. So if I put on this trade in this current configuration, let's just say I'm going to do it 565 to 570. We can see here, it's a little bit easier to see if I go out to expiration, and this is the shape of that trade. We can see here that in this trade, I'm going to pay $308 for it. That is my max potential loss. I can't lose more than I pay for that trade. I have the potential of $191 in profit. And strictly off of the math, if we were to just look at the math behind this, I only have a 48% chance of profit. But why do I still consider this a viable trade? Because on this side of the equation, it doesn't look that great. Only a 48% chance of profit, and I don't even have 50-50 win-loss. Something that the P&L diagram does not take into account is our chart pattern and the bullishness of our current market. So if I have an opinion that our market is much more likely to go higher than it is to go down or than it is to stall at this point, that can boost this chance of profit significantly higher. And I need to factor that in as a trader. I need to factor in how likely do I think our market is to go higher. And I think right now, history has shown that we are in a very bullish mode. And I think we're more likely to be higher by September 19th than we are to be lower. So that's why I would look at a trade like this. Now, why am I looking at this trade of buying calls instead of selling a put spread? Selling a put spread would give me the same basic configuration here. The reason I'm not interested in selling a put spread right now is volatility is so incredibly low that selling things, you're just not getting a good value for selling things. You're just not getting a premium for selling things. So when options are cheaper, when volatility is low, I lean toward buying an option. So in this case, I'm going to buy this 565 long call, and then to help offset that cost, I'm going to sell a 570 long call, and that gives me this particular pattern. Now, if I wanted to be super bullish and I was willing to spend a little extra money here, I could remove this from the equation or exclude it from the equation. We can see now my max loss gets considerably higher because I'm having to spend all the money on this particular long call, and I am not offsetting that by what I'm selling here. But you can also see that I have unlimited upside in this particular case. Again, I'm not that bullish, so I'm going to come back and include this, and by selling this long call, just looking at the math on these two, I can see here that I'm buying this for $17.45 and I'm selling this for $14.35. So my difference, of course, is this $308 or $3.08 times 100, because of course options are always quoted in 100 shares. So that is my concept trade that I wanted to share with you. that goes with today's market outlook. Now, those of you that have an interest in a trade that I have been making in my alert service, and it has been tearing it up. This is a new trade that I worked months on designing. I'm calling it the Flyagonal. It's a combination of a butterfly and a diagonal. And at this stage of the game, over about an 8-week period of time, I have made a total of 55 trades. 53 of those trades have been winners. 2 have been losers. One of them was a $1 loser, and this includes commissions. So if I didn't include commissions, that could be a minor profit as well, and I'd only have 1 loser. But these are the results of that trade over the past 8 weeks. I'm up a little over $20,000 in making those trades. I will say not every one of these trades has been shared in my alert service because a lot of it is my personal trading and trades that I'm testing before I take concepts to my students in the alert service. But this is the equity curve of those trades, very solid. So the results are very strong for this trade. This shows me a bar chart of the trade, all of the winners, the size of the winners. There were 2 losers, so there's going to be one little bitty yellow bar in here somewhere showing that $1 loss. And then this loss was certainly a larger loss. But this is the only loser out of all of those trades. So if you are interested in knowing more about the alert service, which is literally less than the price of a cup of coffee a day, I urge you to look at the link on the screen or scan the QR code and check it out in more detail. Come join the alert service, see where I'm sharing these trades live in real time, and I'm doing a video that explains the trade so that people understand what it is before they consider modeling it themselves. And I'm going to share this video, which will give you more details as well. So thanks for stopping by the Weekend Update. And of course, please make sure that you like and subscribe. Take care.